Daily chart on the left as always, and we're below declining 20 and 50-day moving average, which tells me any rally that comes out of here is likely going to be a bounce within a downtrend. It doesn't mean I don't think it's possible that we could see this market make a V bottom, but I think there's just too much political uncertainty that that is going to happen. Maybe it will, but it doesn't seem likely. Let's take it one step at a time, just as we have all the way down. So we've had that pattern of lower highs and lower lows, and now we're getting a bounce. Now, again, when we get back above that 5-day moving average after such a prolonged decline, it means dip a toe in the water. What I really want to see is maybe we rally up a little bit and then pull back. That 5-day moving average flattens out, and then I think you could get a whole lot more aggressive. And the first level of interest would be the month-to-date anchored VWAP. That's this blue line. Next up would be the 38.2% retracement of this high to that low. And then we've got the anchor off the all-time high. So we're setting up for continued bounce in here, it seems. So here's a 15-minute chart with that 5-day moving average. Let's just, imagine where we are on Monday. So Monday, we get rid of this data in the 5-day moving average calculation, which means early in the day, if we rally up, it will start to flatten out. So now if you have a small long position, what we'd really like to see is it pulls back down towards here, and then we'll start to see that 5-day moving average catch up to it. And then that's where a higher conviction long could be taken. Right now, a small position today would have made sense. And as I took the day off today, but before I left, I reminded subscribers, chase the gap or wait for VWAP. Do you want to chase this gap here, or do you want it to break below VWAP and then reobtain VWAP and then set your stop below the higher low? If you did, you would have bought here or here. Either one of those was a valid purchase with a stop below the prior low, and you would have participated, not in the whole rally, of course, because a lot of it occurred from a gain, but to be a buyer in this general area, which we're looking at a 1-minute chart, 550, let's just call it 558. If you bought at 558, you'd be up 4.5 points. And, you don't have to use 1-minute charts all the time. But on days like this, I think even a swing trader or even an investor is best off using a 1-minute chart early in the day just for that precision entry. So you're sure you're not buying as the market pulls back, but as it has already pulled back, regathered its momentum and surmounted the daily volume weighted average price.